Hello, good day. Super excited to have you here, and I'm very super excited for what I'm about to share. And so let's go right into the video. So if you're yet to subscribe to this video, please to this channel, please do well to subscribe. And my goal is just to help you become very profitable. And as you've seen from the thumbnail, we're discussing something that I feel is so very important in when it comes to trading, and I hope that you get value from this video. All right. So if you've ever entered a trade on a 5-minute chart because it looks like a perfect buy, only to have the market instantly getting to crash against you, you are likely a victim of ignoring the big picture. And in professional trading, we call this top-down analysis, and that's what I'm going to be talking to you about today. And in this video, I'm going to show you the exact step-by-step process that professional traders use to align their entries with the dominant market force. And we are moving from the forest to the tree so that you never trade against the trend again. All right, so there are very important things to consider, right, when trying to trade the market, right? And we'll be considering that when it comes to top-down analysis. And there are some important questions you should ask yourself when it comes to the higher time frame, because top-down analysis just simply means starting from the top, coming to the from top to bottom, right? So that's what it simply means, right? Going to the higher time frame to identify the higher major structure, and coming to the lower time frame to be able to draw your key support resistance and find your entry, right? So the first important thing you want to do is starting from the higher time frame. And when we talk about the higher time frame, we are saying I'm a day trader, so I'll just use my weekly and the daily time frame. This is where I try to identify the major structure, and I want to answer two questions there. Is the market making higher highs or higher low? That's uptrend, or lower highs and lower lows, which is a downtrend. Because 80% of your job as a trader is to be able to identify the trend, because market always certainly move toward the direction of the major trend. So that gives you a lot of opportunity to identify the trend, right? Are you an uptrend or a downtrend, to be able to know if you are buying or selling, right? And I will always advise time and time again, never you get to trade against the trend, right? Are we at a major historical support level or resistance level? Because on the higher time frame, they are very support and resistance on the higher time frame are very coherent, right? They would always stick. So you want to know if we are on a major historic support and resistance level. Like example, when gold broke above 5,000 the first time, when BTC broke above 100,000, that's the historic resistance level, right? So you want to do that. So if the daily trend is bearish, and your bias for the day is to sell, it doesn't matter how good buy it looks on the 1 minute or the 15 minutes time frame. The daily trend is your boss. So the next thing, we're going to the 4 hours and the 1 hour time frame, right? Remember, I'm giving based on assuming you are trading like me, which is a day trader. So you want to refine your objective on this time frame now is to refine your level and identify the internal structure, right? So now that we know that the boss wants to sell, that the higher time frame is a sell, is a bearish trend, and we drop down to the 4 hour or 1 hour chart, that is where we try to refine our zones. If you're a trader, you know there are zones, key zones. Maybe I don't start going into support resistance trend line, but all those things are zone, or FVG and or order flow, whatever strategy you're using. If you want a strategy, I have a video on strategy, you can watch that. So a massive block of resistance on the daily might be 100 pips wide, and on the hour and on the 1 hour, we can narrow that down to a very specific supply level zone. So what I'm trying to look for on this time frame is to identify market structure shift. So the smaller time frame starting to align with the higher time frame, right? Because you want to be able to get an entry where the smaller time frame, this time frame is now aligning with the major sell trend we've identified, and wait for price to pull back, maybe for a retracement or a breakout, right? Because now this is where you have identified your key areas like support and resistance level, because you're a day trader, you're just like looking for 300 pips, 200 or 100 pips, right? You want to mark out your key support and resistance level. Especially I trade New York session. I tried doing this in the morning, maybe 7, 8 o'clock, and just wait for price to come during New York session to my zones, right? I've marked out and identified on this trend. So lastly is your entry time frame, right? So that is your 15-minute chart. This shows you a specific candle pattern where you look for confirmation, right? Where you now come here, you've identified your trend on the 1 hour and the 4 hours, you've marked out your support and resistance, you draw your trend line and whatever. So on the 15 minutes, you can draw a mini trend line to you, right? You can still based on your strategy. But now I'm looking for confirmation. Let's say I'm waiting for a breakout, right? I've marked out my zone where I'm waiting for a breakout, maybe from a resistance level. I'm waiting for a breakout there. And I look for a candlestick pattern, right? Like a pin bar and engulfing candle or whatever, right? To be able to confirm my entry. So this is where the magic gets to happen. We go to the 15 minutes time frame for the trigger because we did our homework already on the daily and on the forward. Now we are now entering with high confidence. So the entry checklist is, does the setup aligns with the daily bias? This thing is price reacting to a 4 hours level, and is there a clear reversal pattern like engulfing or break of structure, right? So now the holy grail of all this top-down analysis is risk management. I don't have to tell you this. I get all this right and still blow up your account. Risk management. Trading on lower time frame allows for a very tighter stop loss, right? Which dramatically improve your risk to reward ratio. You see, stop loss and risk to reward ratio. If you want to be profitable by risk management in terms of using stop loss, risking certain amount of pips that is commensurate with the appropriate lot size, with the amount of money you want to lose, and making sure you have a good risk to reward, at least 1 to 2 risk to reward is the holy grail. This thing I just said here is really what just differentiates traders who are failing for traders who are very, very, very profitable. So that's what top-down analysis means. It just simply means you are all going from high down, from higher time frame to lower time frame, marking out your zones to be able to identify major structures, to be able to identify trends for you to be able to get a very better entry, right? So if this simplify your trading view, hit the like button. I want to know what is your favorite entry time frame. Let me know in the comment section below. And please don't forget to subscribe for more trading insight on how you can literally become a good and a profitable trader. You can be part of my Telegram group on the community. Oh yeah, I forget. Most times I don't like editing these videos, right? Because I want to ensure that all of you get to get value. All right, so let me share my screen and let's practicalize everything we just said now. So for those of you who has exited, you've maybe lost something. All right, so now this is the BTC USD chart, right? So remember, we'll come to the weekly time frame. This is the weekly time frame, and what have we identified? That okay, overall is a bearish structure, but currently at this point, remember we discussed two things, right? We see for the past 4 weeks, gold has been bullish and BTC has been bullish. So we want to be able to identify that. Then we said, okay, that we'll look for major support and resistance level, historic support and resistance level. And now, so that means we are going to be buying, right? But for it to be buying, look at here, there's a historic support and there's a historic support level here. So now there are chances that the market might either break above here or start tanking, but we don't know what is going to happen, right? So, but overall, we know that gold is a buy, so we want to focus more on the buy. So the daily time frame to see that gold took, it's still a bullish candle, right? It's going up and it's just testing at this hour support and resistance level. So we don't know if this can be able to take up this high. It has touched it before. It's testing that zone now. So when we go on our 4 hours to draw our support and resistance, since we are day traders, we're just looking to make money for the day, right? So the buyers is still buy, stick to the trend. There's no point selling because the structure, there's nothing like sell here. There's nothing like sell here, even though there's sell. So on the 4 hours, we've seen that okay, this is the zone. So we want to know if we buy. And so now on my on my on my on my on my 1 hour, I'm going to use trend line. Okay. All right, so I've drawn my trend line to get my entry. This is what I use to mark out support and resistance. The reason why I'm doing that is see, there's a bounce here. There is a bounce second time. Remember, there's a bounce third time, and it's going up. So now I would wait for price to test this zone, and hopefully when it tests the zone, we're going for a buy. So let's go to 50 minutes and see. So now, based on what I showed you guys now, we are looking to buy, but for we to buy, we'll stick. Remember, we're sticking. We'll always stick to the trend. But for we to buy, we have to just wait very patiently. We have to be very patient, very, very, very patient for we to be able to find the right point to buy at. So just be patient, wait for price to see. Immediately it bounced here, see went up, bounced here, went up. So we want to see if market would at least break this point and go down, right? So I don't like trading against the trend, but really, if I want to enter this trade, because I know it might retrace out at the break of this trend line, I probably would go for a sell here and target 122 at the break of this trend line. But it's going to be a short sell because my stop loss have to be small, like this, right? Then I see going for a buy here. This point. So if I was to trade based on top-down analysis I just explained to you guys, this is what I will be doing. This is what I will be doing. So it's very simple, very easy. Remember the weekly, daily, identify trend. The for 1 hour, for draw your support and resistance. But for this case, I drew trend line 15 minutes. I came. I remember I said, okay, if it breaks below here, this is a historic support and resistance on the weekly and on the weekly time frame. So if it breaks here, I was going for a short sell, and I would exit at this point. Then I would enter back here, and that's what I was going to do. But really, to be on the safe side, I probably will do all this, but I know that this I'll stick to it. It's just so very simple, and this is how literally top-down analysis is being done. And this is what you can do every single day, and you can make good money for yourself. So please do well to subscribe and do well to like as well, and be part of our Telegram community by clicking the link on the description box.